Welcome to our weekly Forex and Futures forecast. My name is Norris. Hey, it's nice to be back, enjoying my summer break for sure. First market, we'll take a look at Aussie dollar. You know, I've been warming up to Aussie. I've liked Aussie, particularly the second half of the year here. I should say the summer anyway. It's been great to pair it with other, like the Swissy long Aussie Swiss, short Euro Aussie. It's been a way for me to tone down my long dollar exposure too. The problem right now for Aussie though is you're kind of up in the cheap seats here. Air's getting a little thin up there. I think you have pretty good resistance. It already proved it once. You know, I like Aussie a whole lot better to pair with the other markets down here and on the way up than I do up here now. So really, I'd love to see this guy break out, give me a couple closes above that critical 78 level. I don't know if you're going to get it. Not a whole lot going on right now. So a little bit nervous with my own Aussie exposure. I'm long a little bit of Aussie Chief here, and I'm thinking about lightening up. Don't mind being short the Chief, being short the Swissy at these levels, but I'm a little nervous long Aussie up. Next market is the dollar Swiss. There it is. If I don't like the Aussie up there because I think the air is getting a little thin, then I kind of would like the Swissy, right? Because it's getting cheap here. Here's a bigger picture here. You can see here's the big pattern I've been focusing on all year long. Here's your impulse move, and here's your elongated correction. And guess what? You're continuing to find support at the 2/3 correction of that impulse up move. So there you go. We're still bullish until we already see a couple closes below that 95 even level. So love Swissy. We've been calling it the trade of the decade for a long time. It worked out really well for us last year too, where you had a beautiful 2/3 retracement in here, and then you had a big run up, and we'll see if you get that again. So as long as you're holding these levels in dollar Swiss, then this guy's good on the upside longer term. Next market, the dollar index itself. Pretty good level there. You got support there. Buy support just below 94. The figure, like that level. You know, like it from both a trader's and an investor standpoint. Definitely from a swing trader's perspective. We'll have to see, but you know, that's one of those trades where I think if you can get in there, maybe you catch a turnaround Tuesday or something like that. You get a little bit of a bounce off of that 95.80 level. I think you want to get in there and you want to hold on. I think you can get a couple full handles out of that trade. But you know, you're in the dog days here, and if there's one thing that turned out a little bit different than I would have thought this year for the U.S. economy, it's just things really didn't pick up like I thought. You started to get the spring boost, but it had no legs. It just couldn't carry on. You know, you have decent enough job numbers, but everyone's holding their breath on that number too. It just you didn't get the growth you saw, and your GDP figures, they're no greater, they're no different than Europe's really. So the U.S. economy is really not standing out like I thought it would have. You know, things can always change for sure. You have a lot of, I suppose, indecision on a political level. But on the other hand, here's the positive side of the U.S. presidential election. When was the last time you saw both parties working together for one candidate before she even became president? So perhaps the die is cast there for the political parties working together, which would be something. We haven't seen that in, oh my God, 30 years in these states. So potentially there's a silver lining to the U.S. presidential elections right now. We'll have to see. But for now, you know, it just when the numbers go on record, it was a pretty slow year overall, and the U.S. economy really didn't stand out. And you're seeing that reflected in this dollar index chart. It's just sideways, sideways to lower, right? Sideways to boring, as we say on the trading floor. So not a whole lot going on here in the dollar index, and as the dollar goes, so does everyone else go in the currency markets. And here's your euro, same thing. You're just mirrored in a sideways market, and you know, it's the opposite, where you're clawing away at resistance instead of support like the dollar is. But speaking of support, there's a good level there. And speaking of trading, I said in the I don't want to be all gloom and doom because this is a big level, just as it was big support in the dollar index. It's big resistance here. That's the one where you get a quick turnaround. You get a turnaround at that 113.80, 114 even level. You want to get in that trade, and again, I think you get a few handles out of that, perhaps even more. You never know. Low volume market gets moving in one direction, you may be able to catch a nice runner there. So big level here in the euro. Boy, I have good memories of shorting the euro just below 114 even earlier in the year, and so I'm gonna stand up again and do that if it gets rejected. If it jumps right through the resistance and just sits there above it, there's no resistance, right? If it tags it and it turns around quickly, then I'll take a shot at the downside. So that's a pretty good level in there to take a shot at it. And what can you say? Long term, another change too. Well, this has been going on for years and years. We see central banker policy, they're much more geared towards the health of the global economy. We're seeing much less nationalism on behalf of central banks. So, and what that means, an example of that would be that, hey, a cheap euro is not good for the global economy just yet. It would weaken European banks. So the Fed will hold off on their policies. The Fed may hold off on tightening they have, not may. The Fed will hold off on what they're going to do to benefit the European Central Bank, to the benefit of the global economy overall. And that's been something that's been predominant, certainly in the last 5 years, probably a little bit longer than that. And that's what makes currency trading a little bit less exciting than it used to be, because you see these elongated counter trend moves. You see these long, drawn-out counter trend moves. Great example of the sideways market we're in right now. But that's beneficial to the whole economy, and that's a little something else that's been different long term. Less nationalism, more globalism in central bank policy. And then this year, U.S. paying the price for it. It has a little bit less GDP growth than we may have had if the Fed would have kicked in and started raising interest rates sooner. But overall, the global economy's in better shape for it. And I think as the global economy goes, we all go. So there you go. Next market, we'll take a look at the yen. I haven't covered the yen in a long time. Why is that? Because the yen just, we did a great job. If you go back and you check and see what you were saying years ago, all the way back in 2012, we nailed that bottom in that yen. There it is, right down in here. We were big cheerleaders in the yen and made a lot of money. It was very nice. But then the yen, it got up here and it just got so toppy. I just quit covering it. There was enough markets to cover, enough risk to have on the table without it. But I'm back on the yen because I think it's at a very critical level here. Come back to the daily chart. I think 99 is a pretty neat level there. You've retraced more than 50% of that entire rally, that entire 5-year bull move. You've retraced 50% of it. That's a big level in itself. That's enough to get me to start tuning in on it. But I just love it. There's something about this market that, the way it's stepping down here and it's starting to find support. Here, I'll show it to you on an intraday chart where we have our indicators on there. There you can go. You can see how it wouldn't take much to shift that 6 and that 12. And if they shift all at once, that's a big move. I'm in there as a day trader and a swing trader too. So definitely something to watch. I think as this market lowers itself down and you start to find more and more support and perhaps you shift these shorter term patterns up, that's going to be a really nice trade to focus on. So love long dollar yen potentially, but that'll be definitely one we'll continue watching. Last market we'll cover will be the U.S. Treasuries, and we'll wrap it up. Here's the U.S. Treasury market. It's really been something else that the dollar has had the strength it's had over the last couple of years, given the low interest rates you've seen in the United States, and that's reflected in higher Treasury prices. The higher the Treasury market goes, the lower interest rates go. So look at that. You're at what I would assume would be crisis levels in Treasuries, yet the economy's just kind of spitting along. So not that big of a deal, but tremendous demand for Treasuries, or another way to look at it is nobody's selling them. Because you have so many people, especially your older people in the U.S. that, the U.S., by the way, is still the biggest holder of their own treasuries, although Japan has quite a few, Europe too, China for sure. But I don't know if it's so much demand as people just refuse to sell them. They refuse to go down. But at some point, the U.S. is going to start to ratchet up interest rates mildly, and at that point, we would expect a turnaround in this market. But man, look at that. That's the longest bull market in the history of mankind. I'm thinking, look at how long that sucker's going. 16 years. So at some point, U.S. Treasuries will turn around, and I guess that's a positive overall that you have such demand for U.S. Treasuries, right? For U.S. government debt, not a bad thing at all. But it's just kind of clogging everything up. If no one's taking their money out of Treasuries, then that money's not working its way into other investments. Thank you so much. My name is Jay Norris. I teach trading at Trading University, and we'll see you next time.